Hey everyone, it's Tom Krads, and we're going to give you a quick real estate update. A few months ago when COVID first broke out, we kind of gave our predictions on what to expect with the real estate market. We went over some of the supply and demand numbers. We went over some of the access to credit concepts, and we thought that with the supply and demand numbers that we had built in the GTA and in Ontario in general, and with continued access to credit, the real estate market would hold strong. So now we just want to give a bit of an update on that. And before we dive in, I always think it's important to share that, look, we do not believe real estate prices go up forever. We don't even think it's a good idea that they do continue to go up forever. Our family survived the biggest real estate crash in Canada's history in 1990. So this is not a discussion about how real estate goes up forever. This is just our own quick analysis and update on what we're seeing at the market. Fair? Here we go. So let me make this screen a little bit smaller. And then let's look at this map right here. I like looking at this map here because this is the green belt in the GTA around the Greater Toronto kind of Golden Horseshoe area. And it really gives us a little bit of a map of what's happening and why it's happening in Toronto. So you have Toronto proper, of course, right here. Population is growing really strongly, has been for the last 10 years. We'll get into the current numbers on the population here in a second. But when we look at this map, it gives us some clues into why we're seeing what we're seeing. So for example, when you come from Toronto and you go east or west, you can see some things happening. We are seeing a lot of activity past the Greenbelt here, which is acting a little bit like a barrier around the Greater Toronto area. But when you jump past the Greenbelt, property prices are really different. And it's why we're seeing property prices kind of explode in areas like Peterborough, for example, and in areas like Barrie, and in areas like Hamilton. But then because Hamilton cannot continue to expand because it hits up against the Greenbelt, we're seeing things in Brantford get really busy. So let me share some of this. Sorry, there's like a little fly flying around here. So here's what we're seeing. Last weekend in Hamilton, we were looking at 4 fully detached homes with investors. All of those homes held offers. All of those homes sold for over asking. All of those homes had between 3 and 17 offers on them each. So that's what we're seeing in the Hamilton market. We're also seeing that in Kitchener and Barrie. So we're seeing that in Kitchener past the Greenbelt here. We're seeing the same kind of thing where if a property is listed for a good price, we're seeing multiple offers on it in places like Barrie as well. And even in Oakville, we're seeing that Oakville was a little slow to get started. And now we're seeing all price points in Oakville. So under 1.5 million, between 1.5 and 2 million, and even over 2 million, all those price points are getting offers and selling. When we were first coming out of COVID, we kind of saw the lower price point homes in Oakville begin to sell. But now we're seeing all the categories of homes in Oakville sell. So that's kind of just like a little kind of quick snapshot on some of the things that we're seeing. Some of the softest parts of the resale market right now that we're seeing are right in Toronto, the downtown core. And specifically, if a new condo project comes on the market and there's like 10 new condos available to be closed on from the purchasers, and if those purchasers have all bought them as investments and trying to rent them out, some of them are now trying to sell those. So for example, there's some properties right in Toronto, right in the Yorkville area, where we're seeing listings increase because it's a new project. Everybody's accepting these condos now and they're trying to rent them out. So we're seeing condos that were getting rent of like $2,800 in January of this year, getting about $2,200 or something in that range now. So we are seeing some softness in some of the property prices, but specifically around new condos where all the condos are coming available at the same time, and the people closing on those condos are either trying to rent them out en masse or trying to sell them. So in those specific condos is where we're seeing some of the softest markets of the condo sector in Toronto. As far as rents, what we're seeing in this area here is all around, student rents, I meant to say. As far as student rentals, around McMaster in Hamilton, Western out here in London, Mohawk College on the Hamilton Mountain, Guelph, Brock over here. We're seeing full capacity at the student rentals, or normal capacity. We're not seeing any lack of demand. It seems that even though the campuses are largely closed down or doing online courses, if they are open, they're still doing a lot of online courses. We're seeing demand for student rentals really strong. In Brock, it's about, we'd probably call it, this is a bit informal, of course, it's just what we're seeing in the St. Catharines area. about 90% capacity. So there are some rooms available in some of the houses. It's not like it's 100% capacity, but it's not like the student rental market has been decimated by this point. Many people thought when COVID started and with online training kicking in, that there was going to be a lack of demand for student rentals, especially if foreign students weren't going to come back. We are not seeing that yet. So we'll keep you posted on that specific point. But as far as student rentals, what we're seeing right now is pretty normal and full capacity in the student rental market. Something else we can share is that rental markets in places like Oakville. So if you're familiar with the Oakville market, north of Dundas is where a lot of the new development is happening. Any of the townhomes that come on there are getting rented up almost immediately. That is not normal. So rental demand in places like Oakville for townhomes that rent, well north of $2,000 are renting pretty quickly. And then in communities like Brantford, we're seeing new records for rent. So for example, in a single detached or fully detached home in Brantford about 5 years ago, we might rent that house out for $1,800. Now we're seeing the same house, if it's converted into a duplex, either side-by-side duplex or top-bottom duplex, we're seeing rents really skyrocket. So for example, we saw a side-by-side duplex with an investor that we work with rent for about $2,000 for each side, meaning the whole house is now earning $4,000 in rental income or $2,000 for each unit in that duplex. That is well above anything we've seen in the past. So the rental market in communities outside of the Toronto core is super strong. So, and then just kind of wrap this up. If we go up into the Collingwood or Muskoka area, we're seeing tons of demand. So for some of the new developments in Collingwood, some of them have waiting lists. There's so much demand, and that's just Toronto families wanting another property up out of the city. Something really interesting, when we were talking to one of the Collingwood sales reps up there, they said that one of the local schools had about 400 students for the last few years, and going into September of this year, they're going to have 600, a 50% increase. They're bringing in portables. So that's a lot of Toronto families that are just kind of moving up north and leaving the city and having their kids go to school up here. We're seeing similar kind of stuff in the Muskoka area and out in the Kawarthas area. Trying to get a cottage is really difficult. So that's just kind of a quick snapshot of what we're seeing. And I want to flip over to some of the different information that we have that we can share with you on why we're seeing some of this stuff. The headlines are a lot about this. So Better Dwelling has this headline out about immigration to Canada's largest real estate markets is down over 60%. And if you're a real estate investor, this is obviously something you want to keep track of, because population growth is a large part of demand, obviously, and that comes from immigration in this country in a big way. So because of COVID hitting, immigration numbers are falling, so we want to keep tabs on that. And we have some other stuff that we've been looking at. The World Education News or worldeducationservices.org website has this interesting study out saying that prospective immigrants and their impact of COVID-19 on interest in immigrating to Canada. If they did a study back in April and the interest was 38%, are they more interested now that COVID hit? It was 38% back in April, and now in June, it's actually gone up. They're more interested. And that kind of reflects some of the informal discussions we're having with different people. So for example, some people that work here at Rockstar have been telling us their friends who are going to school in places like Australia, because some of the laws around immigration and students getting access to citizenship and work visas in that country, they're hearing that the demand to go to Australia as a student is decreasing, and places to come to places like Canada is increasing. So that's something we'll kind of keep track on over the next 6 months and couple of years. Just as real estate investors, we want to know how Canada is perceived by new immigrants to the country or potential immigrants, and to foreign students, which drives a lot of demand in this area. So this is just kind of an interesting study, that it looks like Canada's holding its own as a place and a destination for immigrants. And that kind of makes sense. Canada, with our education system and our healthcare system, we really believe Canada's going to maintain strong demand for immigration. And Canada, the federal government, is always making changes. So this, we just kind of spotted this. New temporary public policy will allow visitors to apply for a work permit without having to leave Canada. So that's new. Visitors who qualify can get a work permit without having to leave Canada. So Canada's obviously at the federal level making changes so that it's easier for people to get work permits who didn't have them in this country to keep the population demand and the skilled workers in the country that we need. Here's something else. Here's Express Canada. Sorry, this is CICnews.com. Express Entry Canada issues 600 invitations to apply for permit residence. So you can see here, you can keep track of what Canada is doing by issuing these different invitations to apply. And you can see on August 5th, Canada issued 3,900 invitations to apply. So even with COVID going on, Canada is still inviting people to apply to come into the country. So this is something we're going to monitor really closely to see how it affects demand. And you can do this yourself too. On Stats Canada's website, sorry, my little face is in the middle here. Let me get this out of the way. On Stats Canada's website, you can monitor Canada's population growth right here, and you can see Q1 data is going to be is the latest data that's been published in 2020, and you can see the population growth here is about 76,000. You can actually go and compare that to other quarters, other years. If you list all 5 years out here like this, you can look at this information for yourself. So you don't even have to trust any of the headlines or anything that you're hearing from us or anyone else. You can go here and see Q1 of 2019 was 96,000. So Q1 of this year, 76,000. Last year, it was 96,000. So you can kind of keep track of some of the population growth numbers. It's always going to lag a little bit, but you can keep track of some of this stuff. And the population numbers, the big immigration quarter for Canada historically is Q3. And it's why here I believe you're always kind of seeing Q3 have a big bump in population. So that's something we're going to watch over the next 6 months and 12 months. How is the population growth in Canada acting, and how is immigration behaving? So we'll watch that. But you can see Stats Canada's data for yourself. If you go to Stats Canada website and track all this stuff, you can kind of see provincial moves. They break it down to natural increase, net international migration, net interprovincial migration. So you see all that kind of stuff. So as a real estate investor, you can keep track of some of this stuff. And some of the best analysis of the population growth is still coming from this report, Toronto Housing Market Analysis on toronto.ca. And if you flip down here, the really important data we believe to look at is this population growth trend. So if you see from 2011 here to 2016, you can see the population grow just about 500,000 there. And you can see where we're expected to be in 2021 and then beyond. And as real estate investors looking at this area, this is important data because the population growth is obviously going to drive the demand, and the family formations that are happening with this level of population growth is approximately in the GTA about 50,000 new family formations per year. And the reason that's interesting is that if you go over to this website here, constructconnect.com, they took a bunch of CMHC data and compiled it for us. We've shared this before. But you could see the GTA has about 36,000 new housing starts come on the market every year, with approximately 50,000 family formations a year over the last 10 years, and only 36,000 housing starts. That's a delta of about 14,000 housing units that we need to supply to the family formations. So over 10 years, we have a shortfall of about 140,000 housing starts to satisfy the family formation demand that's happening in this area. And that's a big part of the reason that even with COVID hitting, we feel that we're seeing such an incredible demand in both the rental market and the resale market here in the GTA, because we have this built-in demand for people who want housing. We have like a 10-year built-in demand. So it looks to us, as long as you can access credit, the demand in the system exists, even if immigration falls for a year or two. It looks to us that we have about a 10-year built-in demand here of like several years of demand of housing, as long as income stays high, of course, and access to credit still exists. And just on that, let's get into that a little bit. Oh, something else we wanted to share is that some of this data we found from Construct Connect as well, which is really interesting. It's saying some of the surveys that they're collecting are saying that the multifamily living is falling out of favor slightly, which kind of makes sense in the COVID era, that people probably would prefer a single family home for themselves. And that's really interesting just because of investors ourselves. We've always been focusing in the single family market around the GTA, on the outskirts of the GTA. So as people kind of spread out from the city and prefer single family homes, it's really playing to your advantage if that's a market that you've been focusing on for the last few years. So CMHC has really trying to calm the housing market, and they're asking banks to really, use their products, which they've tightened a little bit to make it a little bit more difficult for Canadians to buy. And I think with good intentions, they are trying to slow the real estate market down. But what's happening is the banks have been bypassing CMHC and using the other two mortgage insurers in Canada, which are Genworth and Canada Guarantee, who did not make the same changes to their products that CMHC did. So we're hearing kind of through the grapevine that the banks have been using Canada Guarantee and Genworth, and really the CMHC changes haven't impacted their ability to give out mortgages because they're just using the other two mortgage insurers instead of CMHC. And CMHC is coming out to the banks and saying, please use us. We've done these things we've made these changes for a reason. We're trying to calm the real estate market. And then there's the Bank of Canada, and the Bank of Canada is really interesting because they're putting out really pretty press releases lately, and they're basically saying that they're buying a substantial amount of government bonds and other financial assets. It's kind of vague here, but they're buying a substantial amount. So it's interesting because on one hand, you have CMHC who's trying to say, let's calm the real estate market. We're trying to introduce new policies in our own products that might kind of calm the market. But then you have the Bank of Canada who's saying things like, when the financial system is working, households and businesses have access to credit. So they're out here saying that they're doing these things to help the access to credit. And that they're purchasing these, mortgage-backed securities, and they're intervening in the financial markets so that they can, help the economy. So it's kind of interesting that the Bank of Canada is saying that they want to make sure access to credit is still exists. And then you have CMHC trying to kind of like turn down the access to credit. So it's a really tricky environment when you have, the Bank of Canada doing these things and lowering their interest rates. And then you have CMHC trying to thwart the real estate market a little bit. So we're like in this fascinating dynamic right now. And then there's another website. Tracktherecovery.org is pretty interesting. This is a US-based website, but the reason it's interesting is that you can look at small business revenue here and employment on this thing. Actually, if I go to the homepage here for a second. Yeah, let me switch over here. So tracktherecovery.org. Check this out. This is employment for high wage workers and low wage workers. So look at the difference here. High wage workers have not been impacted very much at all, and then lower wage workers definitely have been impacted. And the stock market's on a tear, obviously. Real estate in the Greater Toronto area is on a tear, and we think for many of the same reasons that the people who are buying the homes, their incomes have not been impacted greatly. But it can only, if this doesn't come back, if low wage employment does not come back, it's only a matter of time before it affects the economy as a whole. So this is really important data to pay attention to. So if you want to look at this, and even though it's US data, it's likely going to mirror what happens in Canada here. So if you want to track some of this stuff, this is really interesting stuff, really interesting data. And if you look at the small business revenue in the US, check this out. Small business revenue is down like 19%. So if that in any way mirrors what's happening in Canada and the Greater Toronto area, we likely have economic problems ahead that we have not faced just yet. So even though the real estate market's on a tear right now, experienced, wise real estate investors need to be forward-looking and prepare for some of this stuff. So this means, managing your expenses, managing your cash flow, checking to make sure your rents can cover your expenses if you're purchasing any new properties. This is not a good sign. And if you look at small businesses open, it's roughly it's a similar percentage that, there's quite a few small businesses that, like this came up, which is kind of shocking. This came up where most businesses were opening again, but then now it's coming back down again. So really I don't know if this is a canary in the coal mine for the economy ahead, but it's definitely something we should all be watching. So tracktherecovery.org, some interesting information. That's that website again there. And the reason that we need to be tracking this stuff, here's the US deficit. So in the financial crisis, they had a really strong deficit here, and then they kind of crawled out of this a little bit. They never got positive or even didn't even break even again. And now it's headed back in this direction. So, and Canada obviously is in the same boat. The only reason I'm not sharing a chart for Canada is the US does a much better job at getting their data out like this. In Canada, especially right now, it's hard to get the very latest federal debt numbers in Canada on a chart form like this from the government. But when we do, we'll definitely share it. If anybody has that, please share it with us. But the reason we're sharing this is a sign that the economy is not healthy, and that interest rates are likely going to stay low for even longer than anyone had ever predicted, because when you have this much debt in the system, interest rates cannot go up, or the governments can't pay the interest on their own debt, which means low interest rates are going to be here for a long time. The only way the housing market is not going to get access to these low interest rates would be if down payments or the banks really change their lending requirements. So if the banks really got nervous on the state of the economy and changed the criteria for us to be able to buy new property, that would be the biggest deterrent to access to housing in the GTA, because it looks like interest rates are going to stay low. So it's not going to be the price of money, it's going to be the qualifying for the money that's really going to have to change. So we really think that there's an interesting dynamic ahead. If there's some economic turbulence ahead, and then if the banks decide that they don't like what they see and they make it much harder to buy property, that really could thwart the real estate market for some time. And to us, it'll be really interesting to see the federal government's response to that. Are they going to want that? Are they going to want the banks to tighten up access to credit and for the real estate market to cool? Or are they going to come back into the market and say, holy smokes, we need the real estate market to turn and grow. So, here's some new programs for Canadians to be able to buy. Or they start arguing with the banks and get the banks to lower their lending standards if the banks raise it too high. So basically, with the amount of population growth that Canada has, if the demand is there. The housing starts have been well below population and family formation growth in this area for a long time. So we have demand. It looks like immigration, Canada is still going to be a destination of choice for immigration. It looks like we still have a lot of spending in the economy to go. The CERB has just been extended again. So a lot of the federal government stimulus has not run out yet. So we have a lot of these things in place that have kind of delayed any economic impact in this country. So it's going to be, it's just totally fascinating times on what's going to happen ahead. And, if you look at Canada's debt levels, Canada's debt has shot up through this. So, it's just going to be fascinating to see what happens. Like, are we going to see negative interest rates here in Canada? Are we going to see the banks tighten lending and make it harder for Canadians to buy? Will the federal government then respond and ask the banks to make it easier? So just interesting times ahead. Listen, just remember, in your real estate journey, real estate does not go up forever. As investors, we need to buy smart. We need to buy good properties in good areas. We need to manage our expenses. That's a little bit of a market update and an update on what we're seeing. It's going to be fascinating to see what we see over the next 12 and 18 months. We'll stay tuned into this. We'll share what we're seeing. That's it for now. Until next time, your life, your terms.